Thanks for joining us once again. This is Greg. Today we focus on the latest production numbers that came in for Tesla. And, 500,000 vehicles, pretty good number in general. But we wanted to dig into it because obviously the stock price fell dramatically 5% after it came out. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy the show, would like some better ideas on investing and trading, please join us on Patreon. So, as you know, we came in a little bit light on the number of vehicles sold. I've been studying China like crazy for the last several weeks, and then casually for the last several months, and things are very rough there. But Tesla was able to successfully get decent numbers out of that location, which I think they deserve a lot of credit for. So, in specific, what I wanted to cover today is the fact that there are different elements to how investing works, how trading works, etc. And so I specifically wanted to review what I think is going on right now relative to these new production numbers. The first thing that I want to review with you is a concept that's called the quiet period. So how does it play into this? Well, there's a rule that the SEC has that for public companies, whenever there's scheduled material news that will be coming out, they're not allowed to say anything for a certain period of time prior to that event occurring. So an example in this case will be the production numbers that arrived yesterday, but also there's a quiet period for 30 days prior to the announcement of earnings. So as a result, we're kind of in this weird deal where by law, we have a double quiet period from Tesla automatically because of how Tesla chooses to reveal its production numbers. So that said, there's an interesting sort of forensic accounting process here. The first part of that process is to talk about the fact that there's a quiet period. The second part of the process is that the numbers that produced a $300 or in the previous earnings period, Tesla came in with their production numbers, and the price point that the large institutional investors perceived to be consistent with that amount of production and the growth of production was approximately a $300 stock price, somewhere between $250 and $300. So pretty much that number should have held until we got to the next earnings/production period, so we'd know more about how the company was doing in all phases. Well, obviously that did not occur. The stock basically went from around $300 to almost $500 a share relative to the Trump announcements. Well, there are two problems with the Trump announcements that'll be impacting the stock. Number one, we're in a quiet period, obviously. Number two is that the changes and what might happen with those changes, we don't get to find out until during or after the earnings. So what this means then is that, yes, you could have large institutions that are looking to buy and trade Tesla, but more likely what you really have is some very well-heeled hedge funds that are pooling their capital to concentrate their trading in Tesla because they want to concentrate trading wherever there's action in the market, and Tesla has and continues to be one of the most heavily traded stocks out there. So another component of all this is that 69% of all money that's being invested is in like mutual funds or index funds or being invested directly. But basically that pool of capital is in a capital preservation process, not as much as an aggressive trading process. So what that means then is that you end up with a situation where you could have something happen. For example, let's say Tesla's stock price rises dramatically as it just did. What can occur is because it's a larger part of the S&P 100, it's a larger part of the NASDAQ 100, you now have people, even the large institutions are now having to buy the stock at high prices because its market cap has to be maintained as a weight within the indexes. So why am I even getting into this mess? Very simple reason. There are kind of two real types of investors. A long-term investor, buy and hold, wait for a few years, and then sell. Or you have another group of investors where you'd have to call them hedge funds, moving very quickly in and out of stocks, looking to capture great returns whenever possible. And so if you're a stock that's in that realm, there are a lot of crisscrossing forces that could occur. In the past, we've discussed the fact that there are hedge funds that could be in a risky position because they've shorted the stock. So there are certain companies that are supposed to make money shorting the market or shorting certain stocks. And obviously, some of those guys will get blown out. And the way they get blown out is the stock rapidly rising in pace, and those hedge funds are unable to sell sell out of their positions if the stock stays up or continues to rise. So what I shared about this about 2 weeks ago was I indicated that from an institutional investment standpoint, there's no way that the numbers that Tesla has generated on a quarterly basis over the last 2 or 3 quarters justify a $450, $500 stock price. So therefore, you have these large institutions with a lot of money, and pretty much based on parameters of investing, they weren't able to keep buying at those levels because the gap between what the stock price was and the fundamentals on the stock was too wide. And so at that point, I indicated that we're somewhere between 50 and 100 points over where we should be. And the stock price obviously has come down from the 450s when I was talking about it, even above that into the 480s, and now it's in the 370s. So there's a Mexican standoff going on right now, which is there are people called value investors, which you could argue at least 50% of the market is at, maybe even 70%. And for a value investor to get into Tesla right now, that number is something below 300, something like in the 280s. So I believe that, as I shared with you before, this is a great opportunity if you have trading going on in your retirement account. It's a great opportunity to sell and then buy back in because there are no tax consequences. If there are tax consequences, this is a great time to hedge, meaning buy some puts, perhaps 5 to 10% of your portfolio, higher if you feel so, and let the stock price fall, collect the proceeds from the puts, and now you don't have to lose all that money and you don't have the tax hit from selling your shares. So in general right now, my review of the approximately 500K units sold by Tesla is that, 5,000, 6,000 vehicles, the gap between that and what the expectation was wasn't a huge number. As you know, there are different statements made by analysts. There's the number they were expecting. Those are the published numbers. I think it's about 510,000 vehicles. Tesla just came in a little bit below that. There's also something called the whisper number. So the whole idea there being, hey, if we say 510 and you come out at 520 or 530, it suggests that the business is extremely strong. And so therefore, we need to increase your valuation relative to that. The problem, though, we're having right now is because the stock price is up so high, you would have needed between 550,000 or 600,000 vehicles to justify the current stock price. And there's no vehicles that are sitting and selling large enough volumes at high prices within Tesla that would justify that. Can that change? Absolutely. The number of robots in the factories could impact that right now because it's lowering costs and it's demonstrating the use case for those robots. There's a number of things going on, like what's going to happen in the semi and how many vehicles will be sold, etc. That's lurking out there. We also have the Roadster coming out. So there are a lot of possibilities. And then finally, as you know, energy storage business, Tesla just started building megapacks in China as well. So that business is continuing to grow. So there's a lot of positives out there, but not huge growth positives to maintain the stock price at its current level. So I want to apologize to you if you got smashed, lost some money in the pullback here. We tried to warn you a few weeks ago that this would occur, and I hope you were hedged in the process. My expectation is that we're going to get some news as to how Tesla changes relative to the Trump administration and relative to sales of robots, etc., as we get towards earnings at the end of the month. But until then, I think we're stuck in this zone where the stock relative to recent production is still overvalued. So I will not be surprised if we see another 20 to 50 type downward draft heading towards 300, and then post good news during earnings, we end up sort of back around where we are now, if it's strong, or about that number if it's there isn't a story for the future. Remember, as we go into these earnings come out at the end of the month, there are two components. One, how did the numbers look for the past quarter? And number two, how is the future looking? And if the answer is bright, then you get a pump in the stock price up. If the answer is not bright, you end up with a downward draft of that stock price. And we're going to see where we're headed with that as we move forward. At any rate, I want to thank you for joining us today for our Tesla portion. Next, we want to review our health tips. Just a reminder, don't forget your 25 leg lifts a day to ensure that you're strengthening quad muscles and make sure your knees are in good shape. We also want to encourage you to consider a 20-minute walk every morning, as well as maintaining some kind of a circadian rhythm relative to sleep. At any rate, once again, thanks for joining us. This is Greg for Teslafaninsight. Just au revoir, la hit road, hoda high faz drajsi, ni hama, kambawa, namaste. And in Jamaica, we say enough respect, walk good. Thanks for joining us. Have a great day, and bye for now.